Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday the 15th of June 2019 and we're providing our gold and silver weekly update for the week ending the 14th of June. Gold rose $1 last week from $13.40 to $13.41, having hit a high of $13.57 and a low of $13.20. In sterling terms, gold finished the week at £1,065, that's up £13, and in euros it closed at €1,196, that's up €14. Silver fell 20 cents from $15.02 to $14.82. Having hit a high of $15.11 and a low of $14.65. In sterling terms, it closed at £11.77, that's down 2 pence. And in euros, it closed at 13.23 euros, that's down 0.03 euros. The gold to silver ratio rose from 89.2 to 1 to 90.4 to 1. The Dow Jones closed on Friday at 26,089, down 17 points on the day and up 106 points on the week. And the NASDAQ closed at 7,796, down 40 points on the day and up 54 points on the week. And the S&P 500 closed at 2,886, down 4 points on the day and up 13 points on the week. Brent crude fell $1.28 from $63.29 to $62.01, and US light crude fell $1.48 from $53.99 to $52.51. The dollar index stands at 97.57, that's up 1 point on the week. We ended last week's video with the words, quote, "So next week we may indeed see a pullback, certainly of gold prices initially, and especially as the Mexican tariff threat has been removed. That said, it's quite possible that both gold and silver may only use that as a pause before higher prices are on the horizon," unquote. Well, gold immediately fell on opening, bottomed on Tuesday, and then rose until it peaked on Friday, and then fell back again, more or less to the same level that it closed the previous Friday. So let's take a brief look as to what happened. Firstly, a fall on Monday was not surprising in view of the rise the previous Friday. On Tuesday and Wednesday, we saw pretty benign economic figures. Producer price index and consumer price index were just 0.1%, and core CPI was 0.1% versus a forecast of 0.2%, all pointing to a potential decline in interest rates sooner rather than later. The important day, however, was Friday, with retail sales for May coming in at 0.5%, although lower than the envisaged 0.7%, but higher than the previous month of 0.3%. Industrial production figures for May were also higher at 0.4%, compared with an expectation of 0.2%, and considerably higher than the minus 0.4% the previous month. Although retail sales were good, but softer than expected, they were upward revisions to previous months, thereby lifting short-term yields, the commensurate rise in the dollar, and the fallback in gold prices. From a technical analysis point of view, the near future does not appear that positive. Although there is a fast stochastic crossover buy signal, the current level of 82 is above the overbought level of 80 and suggests a correction. The MACD has a declining positive trajectory, which suggests consolidation as opposed to any major move either way. There is strong resistance technically at 1350 and strong support at 1325, and any break above or below these levels will at least give a short-term indication as to where prices are heading over the following week. What was amusing to us was that when gold moved above 1350, all of the usual pumping suspects came out stating, "This is it, the start of the new bull market, and that it's coming fast," We do wish that perhaps they studied the markets a little more closely rather than just expressing what they wish will happen. Yes, we see some underlying strength, but this could be countered overnight. Much depends on the greenback, and as we've said time and time again, when compared to other currencies, we foresee it remaining strong. The important issue is, will the US and China resolve their differences? If they do, watch a major correction downwards in gold and a considerable spike to equity markets. If not, then we shall have some indecision as traders try to calculate exactly how much damage is being done to the economy and whether the Fed will actually lower rates soon. Recent YouTube videos of ours, which we have highlighted in the description below, show that markets have been pricing in a 100% chance of lower rates in July. If this does not happen, we can see precious metal prices dip almost immediately. We should also not forget the situation with Iran and North Korea. Please keep those issues in the back of your mind. Silver more or less traced gold's movements, but lost ground by the end of the week. We have hit that important 90-to-1 GSR level, gold-to-silver ratio level, which some pundits claim is not sustainable, and we are even predicting a 91-to-1, if not higher, very near term. From a technical point of view, there is considerable resistance at the $15 level for silver, and although it did surpass this, it could not hold on to those gains for long. As we have expressed many times before, the battle that is being witnessed is the one between silver being downgraded from an industrial point of view because of growth fears, and upgraded as a monetary metal point of view. And for the moment, no decisive direction dominates. We see further oscillation and frankly cannot get too excited whether silver hits $14.50 or $15.50 for that matter. Rest assured, if it does go to $16, all the pumpers will be out in force, back to predicting $30, $50 and $100 silver. It's not going to happen unless there is a war. Now, whilst our channel is essentially about silver, as things stand for the moment, from a monetary point of view, we prefer gold, as until trade picks up, the industrial uses of silver will continue to dampen any positivity in that metal price. If perhaps the much vaunted dollar collapse does not occur and it strengthens further, then expect silver to nosedive back down to $14 and possibly even lower. We will become positive silver if and when we see gold move to $14.50, as silver tends to lag gold, and we really need to see that head of steam before we will be convinced a turnaround is occurring. Don't worry, when that time comes, we shall alert everyone and move our position from neutral negative to positive silver. So what economic data is being announced next week? Well, on Tuesday, the FOMC meeting begins. Then Wednesday, the FOMC interest rate decision is made, plus the governor's statement thereafter, giving us a guide as to the bank's thoughts and plans for the months ahead. On Friday, another important day, with flash manufacturing PMI plus flash services PMI for June, and existing home sales for May. So next week, it's all about the Fed. Unless, of course, President Trump can hit the news headlines again. So expect some oscillation on gold and silver prices. Wednesday will be crucial, but we are not optimistic there will be an interest rate rise this month. But Jerome Powell may leave his options open for July, though frankly we believe any rise is more likely to occur in September or even later in the year. We are happy, in fact quite happy, to sit on the fence and do nothing until the Fed chair has spoken, because we also suspect he will be fully aware of the figures which will be released on Friday and will base the interest rate decision partially on that. So, it's sit on hands time for a few days, but of course, if you are underweight precious metals and there are dips, then a small purchase is never going to harm if you have the long term in mind. Finally, our Discord comms channel is going great guns, and Bowman and Greg are doing a sterling job with it. If you've not already joined, then ensure you've signed up as a free or paying member of our inner sanctum by going to illuminatisilver.com and we will send you a link. Have a great week ahead. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.